Guys, in today's video, actually, I was going around with my analysis, and then I realized that imagine you don't need a whole wealth, a whole lump sum of money for you to start investing. You can simply start to invest with from as little as 17,000. Actually, this is if you are allocating 17,000 aside only for investments. This is as an example that is, but investing, especially in the NSE right now, has been simplified so much that you can invest with as little amount that you have. Because back then we had regulations whereby you were strictly to buy a minimum of 100 shares of whatever company or institution you are actually interested in investing in. But the regulations have been watered down, and right now all investors, all who are looking forward to being investors and venturing into investing in the NSE portfolio, they have been encouraged that you can buy shares with whatever amount you have. If the share is going at 5 shillings or at 6 bob, you can buy that one share. As simple as that, either through the NSE portal directly, through maybe the Dye and Blair, and through the Dosika app, through many brokers in between, a number of brokers that you can preferably choose for yourself. And you can also use other brokers that you find them interesting for yourself, because it depends also with the charges and how the brokers handle your finances or handle your portfolio. That is, where you need to sell or when you need to buy. Actually, I did my own analysis with 17,000. If you are looking forward to breaking a portfolio of 17,000, I've uh, I've diversified this portfolio whereby I have a banking sector, and then I also have an energy sector, and then I also have an insurance sector whereby I have SCBK, that is the Standard, that's the Standard Chartered Bank, the BTK, and then I have KPLC, and then I have Kenyari. Those four of them, with I was using an example of 17,000. If I'm looking to invest 17,000 in these four companies, because I'm also trying to diversify the banking sector, the energy sector, and also the insurance sector. Now, having to allocate 17,000, it will actually have me 50 shares of Standard Chartered Bank, because it will amount to approximately 16,875. The top amount will be, of course, what the broker will have, like that, those charges also in buying the shares. Yeah, imagine for Stanbic, for Standard Chartered, that's the SCBK, you'll have 50 shares with 17,000. Let's look at DTK. At DTK, right now DTK is trading at 149.50 shillings a share. Now, with 100 shares, if I need 100 shares, because my budget is 17,000, that's what I've set aside for for investing in DTK. Now, for DTK, right now trading at 149.50, I will have secured 14,000. I'll have secured shares, 100 shares at a cost of 14,950. Let's come to KPLC. That's now in the electrical industry, which right now it is trading at 20 shillings point 45. Actually, NSE has really improved. By the beginning of this year, NSE, we opened this year NSE trading at 15 shillings. Right now we are halfway through the year and NSE is trading at 20.45 shillings, and it's paying also very good dividends. Now let's look at it. Now with my 17,000, I'll have allocated. I'm giving a solid number, and also it's an approximation. Let's put 900 shares for KPLC. Right now trading at 20 shillings point 45 cents. I'll have incurred a cost of 18,405. That means I'll need an additional 1,405. But still, you can leverage on the number of shares you buy, 800 and something like that, in order to specifically cover the cost uh, of your budget, that is 17,000. Because in this example, I'm working with 17,000, and also with the charges that your broker will be charging you in order to facilitate the trade. And then let's look for the last one, which is in an insurance company in the insurance sector. That is Kenya Re. Kenya Re, actually it is trading at 3 shillings point 54 cents. Actually one of the lowest counters, because even KQ is trading higher than Kenya Re. KQ right now is trading at around 5 shillings, nearing 6 shillings. We are looking for KQ to skip into 6 shillings very soon. Remember KQ also, we opened it this year, and it was trading at around 3 shillings. I've been monitoring KQ so close. It was trading at 3 shillings. Once the management of KQ was changed this year, actually it was just closed after we had opened the year. The management was changed, and KQ is really promising, working very well. We can see that recent news in KQ whereby the Boeing 777 that was in Turkey has been brought back. It's also a good industry to venture in. But now here, I'm looking at Kenya Re. Kenya Re is trading at 3.54 shillings. 3.54 shillings, and I have 17,000 that I want to invest in Kenya Re. How many shares will it get me? I'll get a rough estimate of 4,700 shares for Kenya Re. And Kenya Re is a very promising industry. Actually, when you delve down into the financial books of Kenya Re, you can also go there and see what the management has done, what are the vision and the goals of Kenya Re, and you can also see their historical performances from the historical data, and you can be able to see whether 4,000 having 4,700 shares of Kenya Re is worth it from your end or not. Because for me, having this kind of portfolio is a very stable portfolio whereby I've diversified it from Standard Chartered and DTK, which are in the banking sector, KPLC in the energy sector, and Kenya Re in the insurance sector. So with 17,000 or whatever amount, for this one I've used an example of 17,000, but you can invest with as low as whatever amount you have, provided you know the share price of that particular company you want to buy the shares from, as little as you want and to as much as you also want, because the portfolio is open from Monday to Friday. Feel free to create your own wealth. We usually say you create your own luck, and creating your own luck is having these simple things, just simple characteristics, simple principles that in the next 10 to 15 years to come, you'll be sitting back and reclining in your chair saying that, I made a good decision back then. And also, you'll be able to teach people and also the generations ahead of you that this is the way to go. So, guys, aside 17,000, I've used an example of 17,000, but you can go ahead. Also, you can narrow down on this portfolio that I've given you that involves Standard Chartered, DTK, KPLC, and Kenya Re. You can also structure your own that you find it interesting, because we usually say you invest in a circle of interest where you are well informed and well equipped of what business that institution or that firm or that organization is doing, because you want to know the business. You have to know the business that you are investing in. You have to know the business. You can't just invest blindly. You have to know the business. So, out of this example portfolio that I've given today, you can also narrow down to it, or you can also find an interesting portfolio that you can create for yourself. Remember, diversification is also key. That's why I've given an example whereby I've diversified in 3 sectors. You can also find your own interesting portfolio, provided you delve down to the gist and be able to see what is interesting for you to buy the shares in. What company do you find it promising to you in the next few term, if whether you are investing short term or long term, because that is the progress that you're going to make right now. We are not going to lag behind, even if time, now we usually say time is not on our side, but remember, you also create your own time. Make time also work for you, because in investing it's all about compounding. That means you are delegating time to do tasks for you to make the compounding and bring you the profits back at home. Now let's meet in the next video. You can also throw in your comments at the comment section with the portfolio, with your portfolio and your areas of interest, and together with the amount that you also look forward to be consistently and principally focused in investing monthly, weekly, daily, whichever. Remember, we are all going bullish. We are all going bullish in the NSE. NSE is performing very well. Actually, recently the news we've seen that NSE has been ranked. Was it the fourth best performing stock market globally? Just imagine, globally we are performing very well. So NSE is a go buy, it's a go buy, it's a go buy. You can't relent on NSE. You can't blink on it. You can't give it a second thought, because once you blink, we'll have gone, we'll have taken off, and you'll be there saying that, oh, if I wish I would have invested in. So don't be caught in such kind of regrets.